Okay, guys, so we're gonna take a look at what's happening with the S&P 500. This is a little bit of a trading model that we use at the Market Surveillance Alliance, and my idea is always to use sort of like a rotation that will indicate, okay, so we're gonna trade these levels, and what it does for us is just okay. The way it looks right now, we should be looking to buy. No, actually, we should be looking to buy puts. Because that's all we do. It's a very simple, very basic. Call it whatever. It's almost for dummies. That's all we do. It's just buy. We buy calls and we buy puts. Super simple. Now, why? At least with the S&P 500, the market, the whole thing, we need to have a trading model because you want to have an idea, a sense of direction. So usually when you get to these levels, I am looking to be a buyer. Was a buyer here, buyer here, buyer here, buyer here. And you can buy a 30-day, okay, from today, you can buy a 30-day call options, for example. So I'm cautious because we're in front of FOMC meeting. That means that the Federal Reserve will get together and there's a lot of back and forth that, at least so far, verbatim, they've been talking about this whole thing of, okay, you know what? Let's put some kind of look to slow down inflation. I don't know how it's going to look, but if they don't come up with 50 basis point, I can see that really the market exploding, and again, finding this resistance level. That's the whole thing with technical analysis. You want to have some sort of an idea. I see a lot of based on the algorithms that we use, we're surveillance everything that is moving, and there's some traction, but I want to wait a little bit. Now, what can also happen here, that's another perspective. If you see to the left, take a look to the left, there's this level, okay? And this level tells me that prices can always drop a little bit more, go sideways, and then come back to this area. And we can have, the issue I find here for the markets is that we can have a lower high at 4,375. And that's what I'm still thinking about it. So the markets can actually be sideways for the rest of the summer. That can be a little bit of a thing. And if there's no positive catalyst, we'll be actually basing our trading on earnings of companies that are doing a little bit better than the others. So that's something to consider. So having said that, what I will do if I actually am looking to build up my portfolio. Now, first off, for those that take it easy, now let's take a look at SPY. What you want to pay attention is, okay, so the whole thing looks scary. Yeah, but what are the next levels? Next level to consider is 370. And if you ask me, yeah, this will be a perfect opportunity. That means markets may move lower another 9%. Okay, is that something new? Not really. I mean, the whole liquidity is set back to the lows on March of 2021. So what should you do? Or what do I think you should do? Well, you should buy. And let me tell you why. This is not the first level, and this is another basic model that you can use, which is the 20 exponential moving average on the monthly chart. All right. So what happened is this is not the first time that we're in a bullish trend, and then we just trade under this measure. So we did this. This is like what, 2009 here. Take a look at this. Up like 2 months under that was a -7%. We did the same over there. That was -12, but that was 2011. We recovered after that. This area we have 3 months under that. This is 2 months. This is 2015. That's 7%, -7%. This one is -8%. So you can see that with these two right there, between July 2015 and April 2016. This is not the first time it happened. No, it's going to happen. It repeats. The market has memory, so it's going to repeat over and over again. Now, this one is tricky because this one is the 2000 December debacle. That was -11.25%. So -9%, is that something new? It's not. Not at all. So now you have this big flop here, the whole thing with COVID. Yeah, so you have that. So here we go. Here's the deal. And every time that we have this sort of dips, what happened next? That's where you want to wonder. Wow, we have 18% to the upside. Eventually, we had 55%. This one, we have a full 40%. This one is the anomaly, so you have 63%. And then the second leg during that period gave you another 35%. Down there, if you go back, and again, remember, this is just a pattern. I'm not telling you this is textbook. I'm telling you, pay attention, look at it. Yeah, looks scary. Absolutely, looks scary. I'm not going to tell you that doesn't look scary. Should you be afraid of it? Of course not. You have to turn that opportunity into something better. So from this point that we went up 28%, then another 93%. And this one, for example, this one is a little bit tricky because this one, well, but that's the bear market of 2000. That's the dot-com bubble. So yeah, but after that whole thing, you have a double bottom. From the double bottom, then you have finally the market double, 100% between September 2002 and that's October 2007. So that was 5 years of sort of prosperity and the market double. Past that, what you have to realize, this is the perfect time if you're looking on long term to add a few names. You actually want to look at Facebook. Why not? They still make money. Netflix, I'll pass on Netflix, probably be more aligned with Disney, but still there's a bit of to dig into Disney. I will think about Nike. Nike could be potentially something that you want to do. So there are names out there that you can start loading. Visa, absolutely. I want more Visa. I want more Visa. And these are big names. I'm not saying the market won't provide short-term opportunities. All I want you to pay attention is, hey, you know what? This is not over. We have been here before. It's the index. The index always sort of recycle itself, bringing new names that are going to push it higher. I am positive that Tesla will do a lot of great things in the near future. So that's something to pay attention. Apple is a jewel. Bro, I think like Buffett still knows it and he's super loaded on that thing. It's not going to change. When buybacks are coming back, probably going to start buyback programs. That's just the way it is. So don't be afraid. Yeah, looks scary, but don't be afraid. This is your opportunity to buy, and we know the levels. This is what it's going to do next. A lot of people talking about market crash, and I have a question for you. Why do you want the U.S. to get into a recession? Just for you to feel that you did the math correctly, that you know more? No, a recession, and God forbid we get into a depression. It's really bad for a lot of people. A lot of hardworking people, moms. Yeah, everyone is going to have a hard time. So it's not about that really. So I will be a buyer here. I know I'm looking for cycles where I will take 17% of my money in the next couple of years. And if it drops all the way to 354, if that were to happen, I'm looking for 17 and then all the way back to previous highs. Initially, I'm looking for a 35% return on my money, conservative speaking, in the long term. So if you're very close to retirement, you probably have to be a little bit strong now. But if you're still adding to your 401k, if you're still adding to your participations for your pension, this is a great opportunity for you to index yourself, bring more index to you. This is something similar that is happening with the Qs, QQQ, and absolutely happening with IWM, which is the Russell 2000. Bottom line of the message today, guys, on behalf of the Alliance, of the Market Surveillance Alliance, no need to be afraid. Historically, we've been here. It's not going to be the first or the last time, but I guarantee you this, the next day will be better. See you soon, okay?